Hey guys, welcome to another podcast. Bob and Phil here as usual. And we got an interesting one today because we're going to talk about the oil reserves. Bob pulled up a chart I thought was really interesting. It's shocking where we are at in our strategic oil reserves. And you're not going to want to miss this. So let's dive into this video.
Trade Junior.
All right, so Bob, this chart is really wild because we're basically at the reserve levels where we were at the bottom of like the dot-com crash in the early 2000s. Like, what's going on with this?
Yeah, hey Phil. So this is more than the Strategic Petroleum Reserve, guys. This is oil inventory available for refiners to convert into gasoline and into heating oil and into jet fuel, et cetera, et cetera, et cetera. And we just basically wiped out inventory. And the reason why is that there's been a lot of pressure geopolitically on the price of oil, right? And so you have a situation where, like ExxonMobil just said, hey, we had $50 billion instead of investing it into new fields and into refining capacity, or just returning it to shareholders. So the major oil companies aren't investing anymore, and production is falling. At the same time, price is falling. And when price falls, inventory falls, you know what happens next? Gas lines. And I'm expecting us to come into the spring here in a situation where Russia now, last year had Europe by the throat, and next year Russia is going to have basically the rest of the world by the throat. People ask me all the time, Phil, about natural gas and why natural gas and oil aren't priced the same way. Oil's up, why is natural gas down? What people don't realize is that natural gas is kind of almost like a waste product for some of these producers, and they just dump it onto the market, and they don't really care about, because it's just like almost like free money for them coming out of the ground. And so you have a situation when oil production falls, you lose that excess natural gas, and now we have a situation also what's happening in Europe where they have no natural gas, and we're converting it into LNG and we're shipping it over to Europe, and so you're going to see higher natural gas prices, which is a problem. You're going to see short-term lower prices in oil, but you're going to see lower availability of oil, and there's potential for spot shortages. And with energy companies having lower oil prices, that means the energy companies are going to start falling in stock. And you always talk about that with me, saying, Bob, look, we can't end a bear market without energy taking a hit. And I think we're at that point. And if you could, do we have a chart for oil so we can show people?
Yeah, let's bring that up. So yeah, this is our pro template. Can you see it, Bob? Can you see it? Is it zoomed in enough? Yeah, so I'll chime in here on it on the technical analysis. This is our pro template, and so we use this because it tells us where the cycles are. All these little bars here tell us when the cycle's turning over. So gray, like the cycle's potentially turning over. This is on a monthly chart. Okay, so when we see that happen, that means that we've probably got some short-term or longer-term resistance depending on the setup. When we get all three of these different cycles lining up like this and telling us, hey, it's rolling over, you can see it's a much more significant issue, which is what we had just gone through here. But the interesting thing about this chart is where our range buy zone is on the monthly, and that is a significant level between like $57 down to about 48 and change. And why that's significant is if you zoom out, you'll notice that we don't spend a lot of time below that level, right? And this goes back to the 90s, which I don't think you really need to go back any farther than that right now. But you can see that is on the monthly, that's a significant level. And the only time that ever gets smoked is on, if we have a crash, right? So this was the great financial crisis of 2008, and we just blew through it. And that's why Bob says, when we end bear markets, it's usually because, the oil's finishing off the move essentially. So if we do, initially this is going to bounce. But if we do see something like what we saw in '08, that's telling you that we're very close to finishing off the bear market. Because once it broke that, we only had 2 more months of down, maybe 3. And then we started to go back up. So you had like 3 more months after that. So that's also another way to gauge if that does pierce that level, that, you probably have maybe 3 months, because I think it's going to be similar, maybe not even that much, but you're within a striking distance of the end of the bear market. But that is a very rare event, and most of the time this thing will catch the pullback and and then we'll get a bounce out of that. So it's a significant level to know where that's at. And I think based on this move, I think you can say that it's probably going to get down there. And it's going to set up a very long-term buy opportunity. And Bob, I know you can speak more to that than I can because you're more an energy guy than I am, but I like the setup long-term. I think it's a great buying opportunity.
Yeah, one thing about the futures market that people don't realize, you see these V bottoms like that because, a lot of the oil producers have bank loans and and also the producers are protecting their position, by selling futures so they get cash up front so they can pay to operate the business. So when oil starts to fall, it tends to overcorrect down, and you get basically these V bottoms. You saw it in 2008, you saw it in 2020, and we'll probably see it again in 2023. These are short-lived, but these are absolutely scared of children move, and you just need to hold your nose and buy because below $50 a barrel, nobody around the world can produce oil profitably, so they'll simply shut down. Okay, and you'll just run out of oil, which then solves the problem and makes prices go up again. So that's what I'm looking at here. And you and I, we've always gone back and forth on this because I have a lot of energy names in my portfolio long term, but I also hold a lot of them in dividends, and I sell calls against my positions. So I'm always protecting because I'm looking to grind out income from energy. And there's simply no way the Green New Deal clowns can substitute oil and natural gas for renewables. It's simply impossible.
Yeah,
and we're seeing it right now in Europe because there's a German word for dark and calm. Okay, and that's what's happening in Germany. They can't produce any renewables right now, and it's happening in the UK now as well. So we're stuck with fossil fuels no matter how you feel about it. And these moves down and up are going to be violent, and they're going to be profitable, and they're going to be longer term because I think the whole ESG Green New Deal is going to be totally bankrupt model coming out of this next recession. People are just not going to hear it again. They're going to be done with that. The people actually like to live in a home that's heated and like to drive and not walk everywhere, the rest of their lives. So
right. No. So I think ultimately, I agree. I think, it'd be nice to have everything renewable and all that stuff, but we're just not there yet technologically. And if you do that, if you force it too early, you just create problems. And I think, I think they tried to do that, and I think we're seeing some effects of that. So eventually, one day, but right now, you just have to go with what's going to work for the economically, and that's just going to be, we're still on fossil fuels. That's just a matter of fact. So anyway.
Yeah, and we'll be the rest of our lives. And look, I'm pro renewables. I'm just not pro government is shoving it down my throat.
So Bob, as far as the oil chart and your take on oil, we talked about some levels here. So what do you think going forward in the next, obviously we got supply issues, right? And we could very well see gas lines. Where do you think we're going in terms of the price of oil? Let's just say in the next quarter, what do you think might happen?
Well, I think your scenario that you're painting in the 50s will probably be the likely scenario with a recessionary move. And then from there, I think we will touch, we'll be out over $100 a barrel again, probably by peak driving season, when we get to June and July. So,
okay.
The seasonalities are playing out. Maybe next week we can just throw up a seasonality chart on oil so people can see, starting in January and February, the season will start turning higher again.
Right.
So I think whatever's going to happen will be happening over the next 60, 90 days. We're going to push down. I think the Fed's going to probably, break the market. I think the dollar's going to go higher, and I think it's going to put a lid on the commodities.
Okay. Yeah, I think on the monthly, if we start getting our doubles and our triples on the cycle, I think you have to start paying attention on the monthly because those are your huge long. That's like if you want to get your portfolio re-exposed to the long side in energy plays. These don't miss, guys. These are very, very viable signals. And again, you can get all this stuff at our website, tradegenius.co. This is the pro template. You can just ask for it.
And I could add just one more thing too. Look, we're buy tradable. So I'm an energy nut, and I just had XLE puts that I just closed for a nice profit. So I'm first and foremost, we let our algorithms tell us what to do. No matter how strongly I feel about something, if it says to sell, we got to sell.
Right.
If it says to buy, we have to buy, and we have to really set aside our biases. That's the whole reason why we started Trade Genius in the first place. So is to basically take math and replace our emotions with the math, so that we can check ourselves, because we're our own worst enemies in trading. And so this thing that we've created here with the Ranger and with the Heat and with the trend bands, it always gets us on the right side of the trade. And so that's what we're watching now. No matter how much I hate the fact that energy can fall hard here, I have to accept the fact that that's what the market's telling us is a strong possibility at this point.
Yep. And that's not to say we don't have rallies too when we get in that situation. And that's why we like our Ranger bands, because we can tell, see, like at the top when it started to roll over, it's not necessarily visible on the naked chart, but when you know the Ranger had flipped, look what happened. We went right up into that, and then we rolled over. So it's telling you, it's giving you a heads up, hey, the trend has flipped, you know. And that's where we get excited, is when we start seeing interactions in these colored zones. So anyway, this is stuff that you have access to. Again, tradegenius.co. You can sign up for that stuff there. All right, guys. Well, that's going to do it for this episode. Thanks so much for watching. Keep an eye on those oil inventories, and we may be in gas lines again. Who knows? So if so, we'll give you another update and tell you what we think you should be doing if we get to that point. Thanks for watching, guys. Please hit like and subscribe. We really appreciate that. We'll see you on the next video.
Trade Genius.